M patterns are showing up everywhere on our charts in the crypto space. We're going to talk a little bit today about what this means for our crypto trades. Well, good morning, traders. It's been a minute since I have done a video like this, and to be honest, I feel a little bit rusty with all my hotkeys. Develop some new hotkeys for this OBS system, and they are interfering with my charts over here, so bear with me as I make this video. I also managed, of course, to gain another cough in the interim since I've made this last video, so I will try to put you on pause so I'm not coughing in your ear in the mic, but let's make this quick and I'll show you what I'm looking at on the charts. Jump straight into the Bitcoin chart and making sure I'm recording here. All right, immediately you see this ascending megaphone pattern, which I've already posted several times about. But also what I'm looking at here is a M pattern, or some people call it a double top. It doesn't matter, it's the same thing. And so what we don't know about this M pattern is how far does it take us down. You can see that I have this multi-year line of now support because we are above it, and that is massive. That's hugely significant, guys. I was really surprised actually to see us just break straight above that when we were on our way up, and nevertheless that's what we did. Now that's acting as support, but remember, each time that we hit that thing, it becomes weaker and weaker, and now we are most definitely in a downtrend, creating a new lower highs and lower lows. And so let's talk about where we might go with this. All right, to do that, I'm going to quickly erase this M pattern that I just drew. And what we're going to do is we're going to get our Fibonacci retracement out, which we haven't done in a while, guys. But this cleans up the chart just a little bit, and I might as well just move this M out of the, or this arrow out of the way. All right, what I'm going to do is draw Fibonacci from our recent high all the way down to where we started this thing at the low here. And that gives us a good idea of a lot of times what retracements like to do is they like to go down to this 1.6 area. Let me just circle that real quick so you can see what I'm talking about. All right, this level right here is 0.618. That is the level of retracement that a lot of times on these pullbacks we like to come to. Right now that sits right around 52,000. To do that, it would mean that we have to break this level of support, which is huge. However, as I stated in a previous post, I am not as confident anymore that this is going to act as very strong support. Yeah, we may get one more bounce, a quick bounce from that level wherever it sits. It's currently, what did I say? It was rising at about 400. I don't know what I said in the last post. But I calculated the amount of incline in terms of price per day. So right now we're sitting at, today we're sitting at right around 62,000. All right, and that's rising, whatever I said, $400, $500, $600 a day. Draw that out on your charts. It goes way back to 2019. I'll zoom out real quick on the weekly so you can see this. Okay, so you can see we started way down here. Get my arrow. Shoot, I grabbed the wrong thing. hard when this chart gets smaller. All right, down here in March of, or December of 2019, actually, that was November. All right, it came back up and touched it in February of 2020, where it acted as resistance, and then it was not until December of 2020 that we broke through it. All right, and we utilized it as support here and a little bit here, made a quick bounce, and then broke. And when we broke this line, it was significant. This is proving how significant this multi-year resistance line is. Now, to draw it more accurately, you want to put it into the daily and really shrink that chart down so that you can get a more accurate trend line drawn on your chart. All right, anyways, here we are today. Now, what's going to be the catalyst of this price drop? Unknown at this point. I don't know. We have lots of geopolitical situations, events taking place right now. It could be one of these events manifest itself into a an event that causes a spike in fear. And we're going to take a look at the larger markets to see what's going on there, because that is having an impact on the crypto price. But anyways, long story short on this, Bitcoin is in a downtrend. I don't know, and I'm not as confident that this multi-year support will hold us. It could, but if it breaks, watch out below. I think we come all the way down. We break these two purple ascending trend lines and come all the way down to our 0.618 Fibonacci, which you can see right here. See this area right here? That's an area of accumulation. It lines right up with 0.618 Fibonacci, so that would be a good target to down if we break this level of support. Okay, now over to our dollar chart, which we haven't looked at in some time. And previously, when I made a video, I had drawn this green arrow out, and I had suspected we're coming back up to 105.6. Almost there, guys. Not quite yet, but almost there. Remember, strength in the dollar indicates a decline in market in the markets, specifically what we've been tracking, the SPY, and basically everything in the market. We're going to take a look at Nvidia quick as well. Before we do that, I've pulled up the VIX chart, and you can see since May of 2023, so going on a year now, we have remained inside of this this sideways channel, with the exception of a couple spikes. But again, these spikes turned out to be bearish, as you can see by this ascending wedge, which is a bearish indicator. And now we have currently spiked back above this channel, with the sideways channel, which we have remained in. You can see this blue descending trend line. If we break that, excuse me, all bets are off. That means fear is going to massively spike. So again, this is something you want to be watching in conjunction with the dollar and our market charts. Let's jump over to the SPY next. All right, and here I have the zoomed out view. You can see everything has happened exactly like I couldn't have predicted market patterns more accurately. I don't have the support level drawn here, but let me just put that on the chart real quick. Brief overcap, we have this inverse head and shoulders pattern. But remember, before this was fulfilled, I suspected we would create the inverse right shoulder. How were we going to do that? Well, I spotted this head and shoulders pattern, which broke, and our target down was exactly this support level at around $409, $10. We hit that precisely and proceeded upwards, and really the bulls have not taken a break since hitting this in October of 2023. All right. Created this channel, which is a bearish channel, but we continue to ascend. Now, what am I expecting us to do here on the SPY? All right, I'm going to get out an arrow here. Here's where we're at today. We have broken the bottom side of this channel. I expect us to at least come down to the top of this red channel. Potentially, we could go inside of this red channel and just continue to come down till we hit the bottom side of that red channel. We could even come back into the orange or the yellow area. That is a potential. But at some point, the bottom of one of these channels, potentially the red or the yellow, is going to stop us as support. And my expectation is once that happens over the next couple weeks or so, then we continue upward. You can see my target for this inverse cup and handle, this larger inverse cup and handle pattern, is way up here at around 570, 575, somewhere in there. And that's what I've been saying all along for this wave 5 of this blow off top, which is playing out. It's definitely playing out. We've beaten previous highs, and we are continued. The market will continue to be irrational for quite some time. I think going into the elections around September or so is everything that I have in the market. That's where I'm going to sell. All right. Because that's where our crash that everybody keeps talking about. So it's in the collective conscious right now. This crash, everybody's worried about it, and it is coming, but not before new highs, new all-time highs. I think this is a brief pullback here again, and we come down to this, either the top of this channel, the bottom of this channel, or bottom of this yellow channel before we continue to proceed higher and make new highs towards end of midsummer, end of the summer, beginning of fall, again into the election period. That's where we're going to have our crash. So guys, watch this closely, because this influences everything we do in the crypto space as well. And of course, Nvidia is a big part of this. Now I want to draw something out here that I'm seeing immediately, and that is this ascending trend line. Now we broke it once, but that was a head fake, and then the bulls continued. We most definitely have broken it with confirmation. I'm going to zoom in here a little bit so you can see that. All right. And one of the first things that I spot immediately is this huge gap right here. When we broke it the first time and we had this big head fake, we created this huge gap. Now, if I was a betting man, which I am, of course, because I am a trader, and that's what we're doing, we're betting. Of course, we're trying to make the most probabilistic bets possible. I'm going to draw this Fibonacci here to our support where we started this trend, right around 470, and take a look at our, our 0.618. All right, let me grab my arrow. It's right here. And that level is, couldn't be a more precise indicator. It's 666. Is that right? Yes, on Nvidia. 666. And that would fill our gap. So, where's Nvidia going with this double top pattern? I can't tell you how many times I've seen this 666, guys, and I'm not superstitious by any means, but it's just interesting. Every time I've seen this 666, we do fill to that, to those levels a lot, and the price here is 666 on Nvidia. Do I think that's where we're going? Yes, that's where I think we're going. So again, back to our Bitcoin chart. Oh, one more thing, guys. I'm going to jump to the altcoin chart. All right, here we are on the total 3, which is all the alts excluding Ethereum. Actually, I have just jumped to the total 2 chart, which is all the alts including Ethereum. Ethereum, of course, is a big leader in the altcoin space. And here we have a trend line here that we're looking to break. You can see the double top pattern represented here as well, and you'll see this pattern repeat on many of the alts. All right, but anyways, let's go ahead and draw out our Fibonacci from this high point to the low point over here, which is right down here. Let's see where 0.618 takes us, and that takes us to an Ethereum price of 919, which is interesting because once again, guys, we have this small area of accumulation right there. All right, just like on the Bitcoin chart. It's when we draw these things out, it's often hard to believe that we'll go that far down. But again, considering everything that is going on in the world, we need to be prepared for fundamental analysis to supersede, take over, and direct our technical analysis. And our technical analysis is telling us that this is at least a potential, and maybe more than a possibility, a probability. Something is happening that is going to cause fear to spike. Already actually has caused fear to spike, jumping back to the VIX chart. All right. And it is causing our larger markets to pull back. And along with that, we are seeing definitely Bitcoin pulling back, and our alts are pulling back even to a greater degree. All right, which often happens. Bitcoin is the lead dog, but alts tend to exaggerate any move down more than they exaggerate the moves up following Bitcoin. All right, so that's what I have. So hopefully this helps, guys. Hopefully you can understand we don't need to overcomplicate this thing any. We have M patterns. You can use Fibonacci to help you determine potential levels of support. Again, we may not get all the way down to that 0.618 that I had drawn there. That is my bottom line of support. You need to watch the RSI on all the charts with this to ensure that we're not getting into serious oversold territory, because that would indicate a support is potentially going to form. And it could form a little bit higher than that 0.618 level. It could form at 0.5. I don't necessarily know. I'm drawing this stuff out on the charts here to provide some potential support levels and target downs. All right, but again, I don't know how far this pullback will take us, or if it will take us that far down. We have a lot of demand from the ETFs. We have halving coming up. So it's really hard for me to see that we go that far down. Nevertheless, the trend is down, and we have to take the trend seriously. We are only forming lower highs and lower lows as of now. Until that trend changes and we form a new higher high, then we have to take this seriously. Everything that moves us up is simply a bear flag, indicating we have further down to go. All right, until the next video, y'all. Peace and happy trading.